All right, guys, we all love SoFi. It has been on a crazy run up, just like basically like a rocket ship. We're right around all-time highs. But what actually needs to happen for that long-term bull case to play out? So let's talk about the 5 things that I see needing to happen in order for that bull case to play out for SoFi stock. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what we're going to get today, guys. We're going to discuss the bull case for SoFi, but don't get this twisted and do some of the crazy bull narratives out there where $200 is happening by the end of the year or any of that other garbage out there like that. We're talking about a reasonable bull case for the stock long-term happening. What needs to happen? And there's 5 keys to that bull case basically playing out and getting us to that future that we all want to have with SoFi that makes it such a great investment in the first place. So let's talk about those right now. And the way I kind of did this was we'll start off with the most obvious and then we'll work our way down to the least obvious points about this. So first up is great management execution. Now you guys know virtually nobody has executed as well as SoFi. Very, very few have exited as well or better than SoFi has. But that has to continue into the future. I'm not criticizing the current execution. Please don't take it that way. They have executed wonderfully, but you can't execute wonderfully for a 4-year period and then take the next 4 years and execute poorly. You will not be rewarded from a stock price perspective. And if you don't believe me, all we got to do is look at Tesla, right? An incredible 4-year run of execution. Earnings performance, quarter in and quarter out, great quarter, great quarter, great quarter, great quarter. And then for these past, 3-4 years or so, the execution has been extremely poor from a management perspective. I'm sorry, there's been missteps. There's been a lot of things that just honestly have been subpar from that perspective. And you can't say Tesla's more than a car company, it's a tech company. And then the rest of tech has been blowing it out of the water for the past 3 years now, absolutely destroying it. And there's Tesla seeing their fundamentals erode quarter in and quarter out instead. Now, yes, I think Tesla turns it around eventually and things start pointing up in the right direction there, but you have to have sustained great execution from the management team, which so far, that is exactly what SoFi has done, but they have to continue doing that in the future, guys. We're talking about that long-term bull case. And again, you don't get the rest on your laurels. You got to perform every single year on the fundamentals, on that bottom line. That's what matters there. Now, do I think they can do it? Absolutely. I have no doubts about Noto and his team over there at all, but they have to do it. And that right there is why it's one of the keys to us getting that bull case for SoFi. So next up is the TAM for online services continues to grow. Now, again, I know that this is obvious, but we have to see the continued move to more and more folks wanting to move online for everything that they do in regards to banking. Now, yes, I think that that TAM does continue to grow into the future, but if we see a slowdown or if we see large banks, large institutional banks, suddenly because of deregulation and some other things of that nature, start to wanting to play more in SoFi's lane because they can, whereas opposed to before, they really couldn't due to the way they're regulated completely different than a bank like SoFi is. JP Morgan's regulated completely different. So they're 2 different types of banks. You got to understand that whenever you're talking about banking. But if all of a sudden the big players decide that, hey, we really do want to go after the individual accounts now, which they've said in the past, hey, that's better served by, the regionals and places like SoFi and other places like that. We can't compete with them due to the rules and the restrictions that we have. Well, if that changes, that could very well change the dynamic and change that TAM and change the way that business is addressed. Now, I don't think people are going to want less online banking in the future. That's probably not happening. That train left a long, long time ago. And the generation that, or the folks that are still holding out on that, yeah, they're in the older part of the spectrum there. And they won't be around in, 10 years, 20 years or so to complain about the fact that everything's online now. Everybody up below that bracket pretty much understands and wants everything online. And so that right there is the direction that we're heading. So I do think that TAM holds, and hopefully the regulation piece holds well enough to where that's something the big banks don't want to deal with, which leaves that TAM wide open for SoFi to jump in there and fill in that gap. Number 3, hit the target market of younger consumers. The market for younger consumers is growing, and that right there has been SoFi's target market, but they have to keep the pedal on what the youth wants. It happens sometimes where you start off targeting youth, you start off targeting younger people, and then your penchant to grow, you want to continue to expand the business out, sometimes you lose your way on that sort of stuff and you start doing things that maybe somebody my age or somebody 10, 20 years older than me want instead of something that the younger generations would want, which to me, that hurts that long-term trajectory for SoFi. And because those younger customers don't want Bank of America, they don't want Wells Fargo, they don't want their parents or their grandparents' bank. They want something like SoFi that's slick, awesome to use. Basically you've got to cater to them. That is the market. I think if they continue to go after that market and kind of age with them and provide products for them as they age as well, I think that right there is the big opportunity and would maintain the bull case for SoFi. If you want to start getting into some of the other business lines that to me don't cater to the younger folks, that right there is when you start stepping on the toes of the big banks and some of the more traditional type stuff. And that's a much harder area to go after. So I would much prefer see them. And for me, the bull case stays intact if they continue to target those younger consumers. Even if that's not necessarily me and it doesn't necessarily target me, that's okay. I'm probably not going to use SoFi to bank anyways because of other relationships that I've had, because I need commercial accounts and a lot of other things that SoFi just can't do. And that's okay. But from an investment standpoint and the bull case standpoint, I know that that consumer is going to be huge in the future. And if they can grow up with SoFi and understanding SoFi and staying with SoFi, that absolutely pushes that bull case forward. Number 4, Galileo gains steam. This one isn't as easy as the previous ones have been, guys. I'm sorry, but Galileo has been honestly disappointing. It just has. Can it get better? Of course. But that is the one piece that just hasn't executed as well as the rest. Now, thankfully, the loan platform and some other things have absolutely destroyed it and more than made up for it in a lot of ways. But for that long-term bull case to play out all the way around, and especially for our last point to happen, we have to have Galileo doing better than what it's doing right now. It has to perform. Maybe not now. It doesn't need to perform up to the 50% we kind of thought before because of the loan platform and some of the other things that they're going after. But you do have to have it performing better than how it's performing right now if we want that bull case to play out. So we need Galileo to gain steam so we can see that bull case play out. And number 5, we need a fintech multiple. Now, you guys know I don't think we need a full fintech multiple, okay? We just need some sort of a hybrid. We have to ensure, and SoFi has to ensure, that yes, we are a bank, but we do more than banking. We are basically a fintech that has a banking component. So almost kind of shifting that conversation from we're a bank that has a tech component to we are a fintech that has a banking component as well that we can offer. That narrative has to shift, more importantly, with the actual data, with what they're producing in terms of revenue and everything else. That's why I don't mind the loan business growing if all the other things outside of the loan business can grow at a much faster rate, because the loan business gives them a little bit of a dynamic, gives them a little bit of an advantage over a lot of other competitors out there. However, if it grows up too much and it becomes too much of a banking, then you're going to get more of a bank multiple instead of a fintech multiple. And in order for the bull case to really play out, you have to have closer to that fintech multiple than a banking multiple there. I'm sorry, it just has to happen. If you get that banking multiple, man, it's just going to be a slow growing stock in terms of stock price for a very, very long time if that's the multiple Wall Street decides to assign to it. So to me, this one is the longest pole in the tent. It's also the one that they control the least. And it's the one that to me is almost, I won't say it's the most important, but it's right up there with the top 2 or 3 most important things that have to happen in order for SoFi to get to that bull case that we all want it to get to. And in regards to, do I have a bull case price for SoFi in 5 years or things of that nature? Honestly, don't, because they gave us guidance last year for the next 2 years and they haven't updated that guidance yet. So I know the guidance that they gave basically for 2 years ago for 2026, it's outdated. Okay, it just is. I think it was 80 cents per share EPS or something like that. And you can extrapolate it out, give it a multiple, and figure out what you think fair value is, which would be right around where we're at right now. Obviously on the low end, down in the lower 20s, the upper end, obviously you can get up right around, 28, 29, 30 or so in regards to price, but I'm not going to speculate on what that new guidance is going to be. I just know that they're going to guide next year for a lot more than what I believe they guided 2 years prior. And 2, if they follow suit, it's going to be sandbagged. So to me, sure, I could create little spreadsheets and charts and try to guess and all that sort of stuff. Well, you know what? I'll just be patient, stick to my plan, and wait for Noto and team to tell me what their guidance is. And then I can make my adjustments to, what a bull price would be in 2 years from there. Anything out 5 years, 10 years, that's silly speculation stuff. Nobody can accurately guess out to that deal. Stocks can run way ahead of your 10-year projections, or they can fall way, way behind All we need to do is look at 2021 for examples of those over and over and over again being epically wrong. And even in a lot of cases, the bull ones being epically wrong to the downside. They were too low. And the bull, the stock shot up way past the bull case as well. So that's why I don't like to speculate out past what management's given me. And because I know the guidance that management has given me is old, and that's not really all that reliable anymore because we can see that the numbers are better than that. I'm forced to just sit back and wait as a prudent investor, and that's okay. I'm out here trying to make 10x content and try to create these crazy bull narratives and all this other stuff to get clicks, likes, whatever. I'm here to just give you guys the truth without the hype. That's exactly what you get there. And if you want more in-depth coverage on that sort of stuff, I may have left something special down in the pinned comment down there for those of you guys interested in joining my group, where we talk about how to do fundamental analysis, how to get a valuation, how to understand price targets, how to set goals. All those fundamentals like that most folks really, really struggle with, and it's key, foundational to your investing. We offer all of it down there. So check it out. I'll have something special down there for you guys. See if our membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.